We called the dump, it happened. Now here's what the chart is saying next. Welcome back to Crypto Academy. Yesterday, BTC gave a massive sell-off, exactly the setup we laid out in our last video. And now, while most of the market is still in shock, the chart is quietly building something very interesting. Something most traders are completely gonna miss right now. Let's be clear about what happened. We flagged the weakness near the resistance, we tracked the falling wedge breakdown, we said a significant sell-off was a strong probability. The market delivered it to the pip. That's not luck. That's what structured technical analysis look like. When you respect the levels, trust the patterns, and don't let emotion override the pain. Traders who followed this channel had a significant edge going into yesterday's move. Now, the easy part is over. The real opportunity is what happens next. And right now, the chart is building a setup that could be just as powerful, but in the opposite direction. On the 4-hour chart, BTC is forming a beautiful bullish flag structure after the recent impulsive move. Now, a bull flag after an impulse is one of the most reliable continuation patterns in technical analysis. It is the market catching its breath before the next sprint. The key question always remains the same. Will buyers defend the support zone inside the flag? Because if they do, with conviction and volume, the flag breaks upwards and the continuation trades become one of the cleanest setups on the chart. The structure is there, the pattern is following, all we need now is a trigger. Dropping down to the 1-hour chart, and this is where it gets really interesting. On the 1-hour chart, the price is expecting a strong ascending trend line support, holding the structure even through the recent volatility. But there is something more. On the smaller structure to the right, we are also seeing a bullish falling wedge forming right on the point of interest. A falling wedge at the point of interest is one of the strongest reversals you can find on the chart because it tells you that the sellers are losing steam, exactly where the buyers have historically stepped in. Two bullish patterns, two time frames, both pointing in the same direction. When signals stack like this, you pay very close attention. Now here is the signal that most traders never even look at, and it might be the most important one on the chart right now. The RSI on the 1-hour time frame is showing a hidden bullish divergence. What does that mean? It means that the price is still respecting the support, but RSI is showing that downside momentum is weakening. The sellers are running out of fuel even as the prices haven't broken up yet. Hidden bullish divergence is one of the earliest signs of reversal. It is the chart whispering what's it about to do before the rest of the market figures it out. When you combine this with the flag, the falling wedge, the picture becomes very clear. And if you need one more reason to watch for a move upwards, look at where the liquidity is sitting. Right now there is a large liquidity cluster sitting above the market between 82,000 and 85,000. These are stop losses of the short traders who entered after yesterday's dump, expecting more downside. They are just sitting ducks waiting to be hunted. The markets are liquidity seekers by nature. That 82,000 to 85,000 zone is just not a target, it's a magnet. And with the patterns we have just identified below, the market has a very strong reason to push up and collect that liquidity before doing anything else. Everything is lining up. The confirmed signals are bullish flag forming on the 4-hour, continuation pattern after the strong impulse, a bullish falling wedge on the 1-hour at a major point of interest, ascending trendline support holding structure intact, hidden bullish divergence on the 1-hour time frame, momentum weakening on the downside, large liquidity clusters above the 82,000 to 85,000. The market has a target. 5 signals all pointing in the same direction. This is not noise, this is confluence. But one rule always apply. Volume confirmation is non-negotiable. Without strong buying volume stepping in, the market can stay sideways before a real breakout. Don't jump ahead of the signal. This is the zone the market is handing you on a silver platter. If you're patient enough to wait for it, the 77,200 to 77,800 is the ideal buying zone. This is where confluence sit. The trend line, the POI, the falling wedge, all of them converging right in this range. This is not a zone to chase, this is a zone to wait for. Watch and react when the confirmation arrives. If buyers step up here with strong volume and you see a decisive close candle back above the zone, that's your signal, not before. Discipline here is the difference between a great entry and an expensive mistake. For summary, 4-hour pattern is the bull flag, 1-hour pattern is the falling wedge. The buy zone is 77,200 to 77,800. The target above is 82,000 to 85,000. The dump happened exactly as planned. Now the real question is, are you positioned for what comes next? The signals are stacking up. The levers are clear. The buy zone is identified. All that's left is patience and confirmation. Wait for the volume, wait for the candle close, let the market prove itself before you commit. That's how you trade setups. Not headlines, not emotions, not gut feelings. The chart, the levels, the plan. If this breakdown helped you, smash that like button and subscribe. Share it with the trader who needs to see this before they miss the setup. If you have any questions, drop them in the comment. I'll see you in the next one. Peace.